Hello, good day. Temitope Ejibadejo again, and I will be doing an example of trading market structure on US oil. The US oil is the instrument. Let's go straight to the chart. Now, this is the US oil chart, 4 hours time frame. Now, we can clearly see a trend here. Let me show you what I mean. Price had been rising all along, and from around this point here, a descent started. Price started descending. So, of course, market structure is bearish. Now, let's establish market structure from this high, this area here. Price went from here down, it retraced itself to this place here, this point, and momentum came into the market and corrected the market, came to this low, and price retraced again. Now let's be sure this is a retracement. It should be at least 38.2 Fibonacci retracement of this move. So I pick my Fibonacci tool, stretch it from here, from the high to the low, and we can see this went past the 38.2 and even approached the 50.0 area. So that passes for a retracement. So after this retracement here, the market corrected itself and went down to this point. So with this, we have been able to establish a downtrend because we clearly have lower highs here, lower highs. This was the first high. This is the second high. This is the third high. And we also have lower lows. This was the first low. This is the second low. This low is lower than this previous low. And this is the third low. This low is definitely lower than this low. So we have a clear-cut downtrend market structure from here to here. Now, this happened to be the last high, and you can see the price retraced and violated this previous high created. When I say violated, this candle closed above the high. With this is our first pointer that it is very possible that the structure is going to change from bearish to bullish. So the price broke above this area, this high, this key high, this structure high, and when it closed above it, after some time, it retraced. Now this is the second rule. Remember that the first rule is that we need to see a candle close above the structure high. The second is that price should retrace at least 38.2 off the prior wave, which is this one. So let's pick our Fib tool and see if it is at least 38.2. Yes, it went past 38.2, it even got to 50.0. So this is considered a retracement. And we know that this retracement must not go below the low, this extreme low level. This retracement did not go below it. Now the next and the last point, which actually gives us the confirmation, is that price must violate this high created here. This is a proof that there is enough momentum in the market to continue producing the uptrend that we desire. So the idea is that we need price to go above this high. Once price goes above this high, it is confirmed that we should have a buy bias. Don't think of selling once a 4-hour candle closes above this level, which is 57.37. This is the current market. This is a setup that is in the making. So we need price to violate this high. The high here, let's see this high, 57.40. So if we get a candle close above 57.40, our bias going on should be bullish. Frown if you see sell opportunities, and embrace only buy opportunities. Remember, you don't want to trade in the direction, you don't want to trade against the trend. You want to trade in the direction of the trend, because the trend is your friend. The prevailing trend right now, if the prevailing trend, once price violates this high, will be bullish, and you only want to buy going forward. But this is now, for me, I can take a buy here, and I'm going to tell you why. This is pure experience. It's pure experience, and I may be wrong, but from experience, I don't need to wait for this high to be violated, and I'll show you why right away. Now, you see this line? This is the key level that we needed for price to violate, to close above, before we can start thinking of a structural break. Now, I want you to look closely at this last candle we have here. This two big candles. It's called a railway track. Some call this thing a railway track. This big bearish candle followed by this big bullish candle. Some people will call this a railway track. Some other people will call it an outside bar. Some others will call it a bullish engulfing pattern. Whichever one you call it, this is a very, very important setup. And let me show you why. Price went above this key level for a second time and started retracing its steps. Now it closed below this level, and the next candle rejected it. By now, if you notice that I respect two candle setups a lot. The engulfing pattern and the inside bar pattern. Those are my best patterns. Those are my best candle formations. Now, with this formation, this rejection, this bullish rejection around this level, it is for me a signal that most likely price will violate this high that I am looking to confirm if we have actually an uptrend structure or not. So I can take my chances on this and take a buy from the close of this candle. Immediately this bullish candle close. For me, yes, it is a bit aggressive. It's an aggressive approach to the market. I will just take a buy right away instead of waiting for a candle to close beyond this high. So I can take a buy from there. I can set a stop loss even below here if I want to be quite conservative, even though I am aggressive at the same time. I can set a stop loss slightly below here because it's quite an aggressive move. So this, for me, price should go up. It should violate this high and make higher highs. Once this happens, once this violation happens, what I expect, I will be looking for only buy opportunities. I'll be looking for different things that will point me to buying in the market. Every time I see the market dip or sell, if I see sellers take over the market at any point in time, I would be looking for opportunities to join the buyers, join the rally, because it would definitely come true. As long as we have not yet seen bullish structure weakness. So this is a very wonderful one to see. Now I want to show you something. You know, for us to be thinking of the possibilities of a structure, a bullish structure, creation of a bullish structure, it means that there must have been bearish structural weakness around here. There must have been bearish structural weakness. And you know how we do it. We use a MACD histogram. Now, look here, from this low to this low, you will clearly see on this my second MACD. This is the traditional MACD. I like to have these two MACDs because if one does not give you an information, the second will give you an information. So I pick my tool just to show you the divergence. There is bullish divergence here, clear cut bullish divergence. This is clear cut bullish divergence. Now let's see if there is RSI divergence. Now you see there is no RSI divergence here. No RSI divergence. So don't be surprised the structure does not break. I have seen only one of my pointers. The second one, which is my RSI divergence, is not there. You understand? So let's see how it goes. Let's see how it goes. But there's strong possibilities of us seeing a bullish market from where we are currently. Another thing I should show us, I think I saw something like a triple bottom. Yes, this is a triple bottom also here. Let me put a line around this area here. You see, this is support. This is a triple bottom. This was the first touch, this is the second touch, and the third contact. So you see, for these reasons, currently I can say that it is possible, or it is very likely, that we get a bullish market structure in the coming sessions. I'm sure by the next 24 to 48 hours, we will know if the candle is able to close above here or not. But for now, I am bullish aggressively. For a conservative trader, you are not supposed to be in a trade until you get a candle close beyond this level. I hope I've been able to pass on more knowledge and more experience to you as regards trading forex market structure. Remember always that the trend is your friend, and your first goal as a trader should be to establish the trend and take advantage of it. And at the same time, you want to be able to quickly identify when there is a structural weakness, so that you can take away your profits before a reversal happens in the market. Alright, I wish you a wonderful and profitable trading experience. Bye.